What's up, traders? I'm not even going to waste you guys' time. We're going to get straight into it. Like, subscribe, comment your thoughts below. Let's get straight into the video. Now, when we're looking at the NASDAQ, what are we looking at on the 4-hour time frame? We are looking at a potential inverse head and shoulders pattern, and it looks absolutely prime. In previous videos, I've been saying over and over, 18K on the NASDAQ is my target, and I wouldn't even be surprised we go much higher than that. Now, you're probably like, there's no way. This guy is just talking. Where is he getting these targets from? How is he constantly being right? All right, we're gonna go over all that. All right, so let's give you more proof. Let's go over the cues. When we're looking at the cues, what am I looking at? So first, let's go to the daily time frame and let's zoom out. All right, let's zoom out, and we have our daily trend. And what happened? We continue to retest this trend, and then we broke below it. Buyers stepped in, and now look what we are doing. We are creating higher lows and higher highs here. Okay, so I have reason to believe that bulls are still strong within this market. If we zoom out even more, look where this trend ends. It ends at 450. 450. Okay. Now, as far as Monday goes, this is the expected move that I would like to see. Let's go back down to the 4-hour time frame. I would like to see a retest of 425, 424 before that next move higher. If we break up back above 430, I believe that buyers are going to step in heavy, okay? Heavy. And at that point, if I were you, okay, not financial advice, at that point, I would be conservative with my plays. Why? Because when the market gets nostalgic, that's when rug pulls tend to happen. When traders' eyes start to get big and they start screaming to the moon, that's when rug pulls happen. So when we get back above 430, I would play very cautious. Okay, I would be cautious, even if you don't want to trade at all. That's perfectly fine. But still, I have to remain bullish. I've remained bullish long term almost every single video. I have to remain bullish. And right now, I'm looking at 450, 440 being my lowest target on the cues. All right. But you're probably like, you know what? That's not enough. I need more. All right. Let's try to give you more, right? ES. What are we looking at on the ES? So if you don't know, 4 hours and below are yellow trend lines, daily trend lines, and weekly trend lines are white. All right. So what are we looking at? What happened on the ES? We broke below our daily trend. Buyers stepped in and broke right back above. Sellers tried to step in again. Buyers stepped in one more time, broke us back above. What am I looking at heading into Monday? We potentially see some retest of the 49.60 level before we head much higher. And right now, the projected move is 50.20. Okay, that is 500 on the SPY, people. That is 500 on the SPY. Okay. So that is the move that I am looking at on the ES. But, you're probably still not convinced, right? So let's look at the SPY. SPY showing the same exact thing. I mean, the ES is the SPY, right? We are looking at the same thing where we continue to break below this daily trend. And I can show you that is not forced, it's connected. One, two, we broke below it. Buyer stepped in here. We broke below it again. Buyers stepped in here again and broke us even higher and gave us higher highs. Okay. It just keeps happening. You keep seeing it across the board. Okay. Now, maybe that's not enough. Let's look at the Dow Jones. Dow Jones, same exact thing. Same thing. Buyers continue to step in and show us that they are still in the market and they are still strong. What do we have on the Dow Jones? I went over the Dow Jones like at least 2, 3 videos. And again, this triple top, we broke above this triple top area and we continue to go higher. Bears stepped in, buyers continue to fight back down here, and then they eventually won. Bears tried again, buyers stepped in. Now we have what? A bullish engulfing pattern right here, and we are breaking higher on the Dow Jones. Not only that, let's just put it all together, right? Walmart has a 3-for-1 split coming up. So that alone, traders are just going to continue to buy Walmart, and that's going to help push the Dow Jones even higher. All right. Until whenever. I don't know. But right now, I have reason to believe that the Dow Jones can see 40K. Okay. The economy is growing. It's been confirmed that growth is getting better. I mean, it makes sense, right? But, maybe it doesn't make sense at all to you. All right. But right now, again, I have to remain bullish. Okay. But let's do a little more. Let's go into a little more fundamentals, right? We'll go over to Russell in a bit. Let's look at Google. I find it hard to believe that Google or the market is going to drop before Google fills at least half of this gap. Okay, find that really hard to believe. Right now, we are in Google contracts for June 21st. I believe there are 170 contracts for June 21st in the Discord. If you want access to our Discord, it's only $25 a month. Get access to my plays, stocks, crypto, Forex. Link is in the description below. But anyway, again, I find it hard to believe that the market would just immediately start to tank before this potential gap fill. But you're probably like, it's just Google. That's nothing. That's not enough, right? Let's look at Amazon. If I can find Amazon. Yeah, let's look at Amazon. Now, I didn't chart Amazon, to be fair, but with Amazon absolutely crushing earnings, with their partnership with Nvidia, with their AI, all that, all the revenue, things like that. We really think that Amazon is valued at 170? I've said it in other videos. I've said I would not be surprised to see Amazon at 200, and I still believe that is very much possible. I still believe that Amazon should be above 200. If the market just so happens to drop now, I just I just can't see it. Okay, I just can't see it. Ignore the gap. Ignore the gap below. Do we believe that Amazon should be valued here? But not only that. Okay, let's just take feelings out the window, right? Not only that, but it has been shown that after earnings, at least 10 to 13 days after earnings, Amazon pumps, and we only got earnings. What the end of last week? What was it? Thursday. So if you don't believe me, look here. Look at the last earnings Amazon had. What happened? We got earnings, and what happened? Amazon started to pump for days. Okay, 4 days, people. Okay, we can go further back. We can go further back. Amazon, okay, probably had bad earnings here, but again, it continued that downwards move for days. Okay, so hopefully that makes sense, right? Wherever whatever earnings Amazon gets, whether it's good or bad, if it's bullish, it continues that direction for at least 10 to 13 days. If it's bearish, it continues that direction for at least 10 to 13 days. Right here, same thing. What happened? Keep in mind, this is the 4 hour, right? But what happened? Right here, Amazon continued to drop. Okay, here, Amazon dropped, but then it reversed and started to climb days after. So I'm not making this stuff up. Okay, it makes perfect sense. Same thing with Microsoft. I haven't charted Microsoft, so I have no idea what we're about to look at. But Microsoft, same thing with their earnings. Look what's happening. When Microsoft has decent earnings or whatever, they run 10 to 13 days after. Let's get rid of this because this is distracting. 10 to 13 days after, same thing. Microsoft runs. Okay. It runs. Okay. And what have we been seeing? We've been seeing Amazon. We've been seeing Microsoft. We've been seeing Meta continue to hold the market up and push it higher. And we still have more time. If we're going by this, if we're just going by previous earnings and data, we could see that at least 10 to 13 days after, if these big tech stocks continue to rise, that they can get us much higher in the market. So hopefully we're putting all this together. Hopefully we're starting to do the math here, and we're starting to realize that there is potential for the SPY to see 500. And considering what tech look like and what their earnings looks like, we can see the Qs reach as high as 450. All right. So let's go over to Russell. So what are we looking at on the Russell? So right now, I honestly am kind of bearish on the Russell, and I think one or two things are going to happen. If the market does drop, well, when it eventually does drop, we either see a rotation into the Russell and then the Russell starts to pump, or when the market or the IWM Russell is waiting on the market to drop. So those are one or two things, or maybe we're waiting on some earnings this upcoming week, and then that's when the Russell drops. Whatever the case may be, but right now I have reason to believe everybody's bullish on the Russell, but I have reason to believe that it's bearish right now. I just don't see it being bullish right now. And the only reason I'm looking at that is because right now we're below this weekly trend, which is the wet red line, and then we're below daily resistance. So I have no reason to believe that the Russell is bullish. If anything, I would just say it's consolidating. That would probably be the more safe bet than rather just saying it's purely bearish. But until it gets back above at least 198, I would even say 200, that's when I'll become bullish on the Russell again. But I do believe that sometime in the near future, if not a couple of weeks from now, we see the Russell go back down to 185. All right. But that's the only thing. That's the only thing I am bearish on right now. Overall, looking at the overall market, I am bullish. Looking at Apple, okay, what happened with Apple? All right. We rejected our weekly trend. We rejected our weekly support. We rejected our daily trend. I mean, it looks good. Everything, this, it just looks good. Everything looks good. So if I'm not convincing you, I don't know what will convince you. But I just have to remain bullish. Now I am aware that Jerome Powell does speak tomorrow, but until we see the outcome of that, I have to remain bullish. Okay. Apple looks good for recovery back to the upside. And I just think Apple should see 200 before the next big drop. Okay, that's just my personal opinion, but as you guys can see, buyers came in heavy on Apple. Okay, they came in heavy and we have broken back above multiple key levels. Even broke above the daily SMA. Okay, we broke above our daily resistance, we broke above our daily support slash resistance. We broke above our weekly support. We broke back above our daily trend. We broke back above our daily SMA 200, 200 daily SMA. I mean, what else do you need? Okay, what else could you possibly need here? Apple looks good, and Apple has the potential to help carry the market even higher. All right, so hopefully this all made sense to you guys. Hopefully, you go into this week a little bit more optimistic, but your best option again, if we get back above 430 on the Qs, and if we get above 500 on the SPY, be cautious. Okay, that's the best thing I can say. Be cautious. Again, when traders get nostalgic, when the greed really starts to kick in, when the FOMO starts to really get high, that's when rug pulls happen. Okay, so if you like this video, like, subscribe, comment your thoughts below. If you feel like I'm wrong, or maybe you're seeing something I don't see, feel free to let me know. But other than that, that's all I really have. If you are having a hard time drawing out trend lines, maybe you're having a hard time drawing order blocks, supply and demand zones, Chart Prime link is in the description below. Some of the best indicators in the game. And if you are new to the stock market and you want to learn more about stocks, maybe you want to start investing, Robinhood link is in the description below. You get a free stock when you join from Microsoft, Apple, Google, all that fun stuff. Check it out. Otherwise, that's all I have. Until the next video, have a good one, traders.